Seeking investment help from a financial advisor can pay off if they're working in your best interest. Sometimes, though, advisors sell strategies that benefit them more than you. David Kaufman is president of Westcourt Capital. Great to see you.
Good to be back.
So let's start with how we find, what are some of the issues that we're talking about here to be sure that they're really working in our interests?
Yeah, what we have to establish is the concept of the duty of care that the advisor owes to the client. And there's this continuum across the country in various jurisdictions, different parts of the industry. On one end, you have the idea of suitability, which really means that does the prospective investment suit the objectives of the client within the client's constraints? And that doesn't necessarily mean it's the best investment, but it's good enough. On the other end of the spectrum, you get the fiduciary duty, which is the highest duty you can have, which basically says that at all times the advisor has to act in the best interests of the client. The client always comes first. And, you know, those two things are not the same. They sound similar, but think if you're going to buy a sweater and it's going on sale the next day. But they don't tell you that when you buy it. Then you see it on sale the next day. You got a sweater, you got what you bargained for, but it wasn't in your best interest because if they had told you to wait a day, you would have been better off. And so that sort of shows that it was a suitable investment, but it wasn't in your best interest.
David, this is really powerful knowledge, but how do we operationalize it? You know, what are the specific kinds of questions that we should be putting to our financial advisors so we know that they're engaging in that duty of care when it comes to managing our money?
Exactly. First, let me just point out that the vast majority of advisors do put their clients' interests first, and there's nothing wrong with them making money because we all have to eat and they work very hard for their clients. But I've put together a list of 3 questions that once you ask them, you can decide for yourself whether your advisor has a conflict of interest that they haven't overcome. The first one's really simple. Is there a commission or a trailer fee attached to the investment that we're talking about? And that alone tells you a lot about perhaps why the advisor may be recommending it to you. And then you couple that with the idea that once I invest, will I be locked in for a while, i.e. I can't sell it, or will there be a penalty if I redeem early, if I decide I need that money back in a year? So once again, that colors it in just a little bit more for you. And finally, you back that up with a basic broad question: how does this investment improve my portfolio? In other words, how am I better off after having made this investment than I was before?
One of the things that even very savvy investors don't know is their after-fee return on the portfolio is really what they're getting, because it's pretty critical over the long term to make sure that a lot of your returns aren't going to fees. Is that something that a manager should be able to tell you up front? Can you say, you know, what percentage of my returns is going to go to you?
It's a great question, because they don't have to tell you about it, but they certainly can't lie. So if you ask that, let's make that question number 4, exactly how do the fees work? Because it may not surprise you that when you get your bank statement at the end of every month, and we all look at it, it doesn't have a huge line that says, here's the fees you paid. But if you just do a little bit of homework, you can find out, and then assess for yourself, am I getting a good deal?
David, just finally, you've written eloquently about this. Why do we not have a stronger standard of care officially written into our Security Act, adopted by the industry? Why is that just not the case in Canada?
Well, it's happened across the world, and I would love to see it happen in Canada, because many of us already are subject to the fiduciary duty, which I think is great. The simple fact is that you have a strong bank lobby. You also have this fractious regulatory body across the country where you have 13 different regulators who don't always act in concert. I'd love to see it happen, but I wouldn't hold my breath.
David Kaufman, good to see you here.
Thank you.
David Kaufman, president of Westcourt Capital Corp.